welcome to the deep dive. After that huge surge during the pandemic, a lot of people, maybe even you, might have wondered about Zoom. Could they really keep that momentum going? Or was it just, a moment in time?
That's definitely the question on a lot of minds. And it's exactly why looking at their latest Form 10K, the annual report for 2025, is so interesting right now. It doesn't just show them holding steady, it actually reveals this, well, pretty bold strategic shift.
Okay.
So our job today really is to kind of cut through all the financial jargon and the corporate speak in that report. We want to give you a clear, concise view of where they're heading and how they're performing.
Right.
So you walk away really understanding things without having to wade through, hundreds of pages yourself.
Exactly. Consider this your fast track to grasping how Zoom is trying to morph from, well, mainly a video app into something much bigger, this AI-powered work platform. We'll look at what's driving them and, importantly, how they plan to create value, whether you're holding their stock, using their products, or just plain curious. Okay, let's dig into this transformation. So the CEO's letter, right at the start of this 10K, it labels FY25 a transformative year. And they talk about repositioning Zoom as an AI-first open work platform. That sounds significant. What does AI-first really signal in terms of their actual strategy?
It signals a really deliberate pivot, a major one. They're consciously moving way beyond just being the video meeting, guys. If you look at the bigger picture, it shows they're aiming to grab a much larger slice of the whole enterprise software pie, productivity, engagement, the works. And they've spelled out three core strategic priorities that are guiding this whole thing. First, really leaning into AI to deliver more value to customers. Second, innovating rapidly within their main Zoom Workplace offering. And third, scaling up their newer growth businesses. We're talking specifically about Zoom Contact Center and WorkVivo. So yeah, it's definitely not just about video calls anymore. It's about embedding themselves deeper into the entire digital workday.
That's a huge shift. Okay, let's unpack that first priority, then expanding AI. We've all heard about AI Companion at launch back in September 2023. What does this 10K actually tell us about how well it's being adopted? And what makes Zoom's AI different? It feels like everyone's doing AI now.
Yeah, it's a crowded space for sure. But the adoption numbers are actually quite striking. Get this. By October 2024, over 4 million accounts had AI Companion turned on.
Wow, 4 million.
Yeah, and the usage just accelerated. In Q4, the monthly active users jumped 68% compared to Q3.
68%, quarter over quarter.
Quarter over quarter. That's up from an already high 59% increase in Q3. That kind of growth, well, it really points to a massive demand out there for AI tools that are integrated right into your workflow, tools that actually help you get more done, maybe cut down on costs, and let people focus on, the more important stuff.
So it's sticking. People are actually using it. And you mentioned their approach to AI is different. How so?
Absolutely. They talk about using a federated multi-model approach. Sounds technical, but basically it means they're not betting the farm on just one AI technology or one provider.
Okay.
They can mix and match, pick the best AI engine for a specific job. Like one model might be great for summarizing meetings, another for translation, maybe another for generating text ideas. It gives them flexibility and, frankly, probably better results for each specific task. And it also means they're not totally dependent on any single AI company.
That makes sense. De-risking it a bit.
Exactly. And crucially, this is a big one they've committed to not using customer content like your meeting recordings or chats to train their AI models.
That's huge for trust.
It's massive. In a world where everyone's worried about data privacy, that's a major selling point. It builds trust, which is absolutely essential if you want people to actually adopt and use these AI tools widely.
Definitely a key differentiator. And they're already iterating, aren't they? AI Companion 2.0 was unveiled last October. What's new there? Where are they taking it?
Right, 2.0. It builds on the stuff people liked, like the meeting summaries, but the vision is much bigger. They're aiming for it to be, and this is their term, truly agentic.
Agentic. What does that mean in practice?
It means the AI is moving beyond just summarizing or transcribing. It's developing capabilities in memory, remembering past interactions, reasoning, coordinating tasks, and integrating much more deeply with other tools you use, like your Microsoft or Google suites.
Okay, so less of a passive assistant, more proactive.
Exactly. Think about it. Instead of just giving you a summary, an agentic AI might synthesize information from several meetings, understand the context, and then maybe draft follow-up emails for you, or create action items in your project tool, or even suggest scheduling the next meeting based on what was discussed.
Wow.
It's a shift from helping with specific tasks to potentially automating entire workflows. It's not just about making meetings slightly better, it's aiming to fundamentally change how some parts of work actually get done.
That's a pretty ambitious vision. I saw something about making AI customizable too, and even industry specific.
Yes, precisely. That's their custom AI companion. It's actually their first paid AI add-on within the Workplace suite. The idea is that organizations can tailor these AI agents by connecting the AI to their own internal data, their knowledge bases, their documents, and integrating it with the third-party tools they already use. So you could have an AI companion that really understands your company's specific processes and information.
I see. Tailored AI.
Exactly. And then on top of that, they announced vertical solutions. Specific AI tools designed for healthcare and education, plus something called Zoom Workplace for Frontline. All of those are expected to launch in FY26.
Frontline, you mean like non-desk workers?
Yeah, exactly. Think nurses, retail workers, field technicians, people who aren't typically sitting at a computer all day.
Right.
These tools are purpose-built to bring Zoom's collaboration features to that huge part of the workforce, helping those industries transform, often driven by, well, AI and automation needs.
Okay, so AI is clearly central. But beyond the dedicated AI companion tool, how is AI being integrated into the rest of the Zoom platform? The core workplace suite. Are there other innovations happening there?
Oh yeah, it's not just siloed in the companion. They're infusing AI pretty much across the board into Zoom, phone, meetings, team chat, whiteboard, you name it. Back in Q1, they rolled out a pretty significant redesign of the user interface. The goal was to make it cleaner, simpler, and also to really push team chat as more of a central hub for communication, especially the asynchronous kind of chatting back and forth when you're not in a live meeting.
Right, making chat more central.
Yeah, and making sure it works seamlessly with all the other Zoom tools. They also expanded integrations with other business software and added more workflow automation features. It's all about making collaboration smoother, especially for teams that are hybrid or fully remote, working across different times and places.
And there was another big announcement in Q2, something called Zoom Docs. They called it a major step forward. What is that exactly, and why is it important?
Zoom Docs. Yeah, that's a really interesting move. It's basically an AI-native document collaboration tool. Think of it like a competitor to parts of Google Docs or Microsoft Word, but built with AI at its core and deeply integrated with the rest of Zoom.
So not just communication, but content creation too.
Precisely. It lets you take information from your Zoom meetings, your chats, your whiteboards, and easily transform it into documents, summaries, plans, whatever you need. Collaborative content creation powered by AI.
And how's that been received?
Apparently pretty well. The 10K says usage more than doubled quarter over quarter in Q4. So it shows they're serious about moving beyond just calls and meetings into being a broader productivity platform. It's a clear attempt to compete more directly with the big office suites.
Okay, so we've seen the AI push the core workplace improvements, the move into docs. But you mentioned a third priority, scaling the growth businesses. Let's talk about those. How are Zoom Contact Center and WorkVivo doing? How are they helping Zoom expand?
Right. Those are key to their diversification, and both seem to be gaining some serious momentum. Zoom Contact Center, for instance, really took off in FY25.
How so?
Well, in Q3, they blew past 1,250 total customers. That included their biggest deal ever in terms of number of users with the Spanish tax agency, Agencia Tributaria.
Wow, the Spanish IRS equivalent. That's a big win.
A huge win. And it didn't stop there. In Q4, the number of contact center customers paying over $100,000 a year, that's annual recurring revenue, or ARR, that number grew by more than 100% compared to the previous year.
Doubled the big customer.
Doubled the number of big customers, yeah. And ARR is really important because it represents that predictable, ongoing subscription revenue. It's a strong sign of stability and future income. They also landed their biggest dollar value ARR deal ever in Q4 with a major Fortune 100 tech company here in the US.
And AI is playing a role there too.
Absolutely, a key driver. They're using generative AI to power features like real-time assistance for agents, they call it AI Expert Assist, plus tools for quality management and workforce scheduling. They've also enhanced their virtual agent, the chatbot, making it smarter so it can handle more complex customer queries without losing track. Better, faster help for customers.
Makes sense. Okay, so contact center's growing fast. What about WorkVivo? That's their employee experience platform, right? How's that performing?
WorkVivo has also really stepped up as a growth engine. They reported record results, especially in the second half of FY25, with growth accelerating everywhere.
Numbers.
In Q4, its customer base grew 89% year over year, almost doubled. And they signed several deals worth seven figures in ARR with big global names like Delta Airlines and another Fortune 10 company.
And wasn't there some connection with Meta?
Yes, good point. They struck an exclusive partnership with Meta to be the preferred migration option for companies leaving Meta's workplace platform. That definitely gave them a boost.
Oh, hey.
And strategically, they're integrating WorkVivo tightly into the main Zoom workplace platform. The idea is to create one seamless place for employees for communication, company culture stuff, and collaboration. This is really valuable for companies trying to keep employees engaged, especially in hybrid setups, and it helps them reach those frontline workers we talked about earlier, connecting people who might not have easy access to traditional corporate comms.
So strategy-wise, it sounds like a lot is happening. AI everywhere, strengthening the core, expanding into new areas like contact center and employee engagement.
Yeah.
But the big question, what does this mean for the bottom line? How did all this translate into financial performance in FY25? And what are they doing for the shareholders?
Right, the numbers. Well, despite what they called macroeconomic pressures and challenges from foreign exchange rates, they did manage to grow total revenue by 3% in FY25. That came in at over $1.9 billion.
Go 3% growth overall.
Yeah, and maybe more importantly, enterprise revenue, the bigger contracts they're targeting that grew 5%. And both of those growth rates actually picked up speed in the second half of the year.
So accelerating growth, that's positive.
It is. And that 5% enterprise growth, you can really tie that back to the strategy shift, especially the AI focus, which helps attract and keep those larger clients. Another really good sign is that their online average monthly churn, basically, the rate at which smaller online customers leave, hit a new record low.
So customers are sticking around more.
Exactly, better retention. It suggests the platform improvements, the integrated features, the AI, it's all making the product stickier. Customers are finding more value and are less likely to leave.
That customer loyalty is key. But what about profits and cash? You can grow revenue, but are they doing it efficiently? How do the profitability metrics look?
That's where they've shown some real discipline. While pushing for that top-line growth, they also focused heavily on operational efficiency. And it shows. Operating cash flow, the cash generated just from running the business, was up 22% to over $1.9 billion. That's a very healthy number.
22% jump in cash flow. Nice.
Yeah. And maybe even more impressively, their GAAP operating margin expanded by 5.8 percentage points.
Okay, unpack that. What does a 5.8-point expansion mean?
It basically means they're keeping more profit from every dollar of revenue they bring in from their core operations. Almost 6 cents more per dollar compared to before. It's a strong indicator that they're managing costs well, becoming more efficient as they grow.
And how did they achieve that?
They mentioned prioritizing investments more carefully, getting a better handle on share-based compensation costs, and just optimizing how they sell and market. And they're still investing, mind you, particularly in AI and making their data centers more efficient, which is crucial for the long run, but they're doing it smarter.
So better efficiency, strong cash flow. That puts them in a good position. What about returning value to shareholders? With that cash building up, what's the plan?
Yeah, that's the next logical question, right? How do they use that capital? They stress they want to be as smart about deploying capital externally as they are internally. So in FY25, they added another $1.2 billion to their share repurchase authorization.
On top of what they already had.
Exactly. They already had a $1.5 billion program. So this brings the total authorized buyback to $2.7 billion.
That's a significant buyback program.
It really is. It signals strong confidence from management in their own future growth prospects. Buying back shares reduces the number of shares out there, which usually helps boost earnings per share, and it's a direct way to return cash to shareholders. But it also leaves them room to keep investing in R&D and potentially make some strategic acquisitions if the right opportunities come along.
Okay, so looking forward then, after this transformative year, what's the big picture takeaway? How do they see their position now?
Well, the CEO sounds pretty confident. The message is that this shift to an AI-first platform has really strengthened their hand competitively over the last year. They believe there's a huge opportunity out there because customers are actively looking for these modern integrated platforms that combine productivity, communication, engagement, and customer service.
So they feel they're now better positioned to meet that demand.
That's the feeling, yes.
Yeah.
It's not just about bouncing back after the pandemic boom. It's about carving out a bigger, more sustainable place in the market by offering this more comprehensive suite.
And if you had to boil it down, what are the main things underpinning that confidence? What makes them think they can keep growing sustainably?
I'd say it comes down to basically three things they highlighted. First, continued product innovation, especially with AI leading the charge. That seems to be their main weapon.
Okay. Innovation.
Second, their sales and marketing engine, their go-to-market seems to be getting better, more mature. It's proving more effective at landing and keeping those bigger enterprise deals, which you can see in the revenue acceleration and the low churn rates.
Right, better sales execution.
And third, just solid financial discipline. They're managing costs, generating strong cash flow, improving margins. That financial health gives them the resources and stability to execute their strategy. So those three together, innovation, execution, discipline, that's what they believe positions them to deliver sustainable growth and shareholder value going forward.
And that wraps up our deep dive into Zoom's really quite transformative year. It's pretty clear they're not standing still. They're moving aggressively beyond just being the video call company into this, well, much broader AI-powered work platform aiming to be part of your entire digital day.
Absolutely. That pivot to AI first isn't just talk. You see it in the products, you see it in the strategy for Contact Center and WorkVivo, and you see it underpinned by some solid financial management and a clear focus on returning value to shareholders. It really paints a picture of a company adapting very quickly and very deliberately to where they think the market is going. They're definitely trying to reinvent themselves.
Well, thanks so much for joining us for this deep dive. Now, here's something for you to think about. As companies like Zoom push towards these agentic AI solutions, AI that can actually do things for us, how might that fundamentally change our own roles at work? What does the future look like, where AI handles more of the routine tasks? And what does that mean for collaboration and productivity beyond just hopping on another video call? Something to mull over. We'll see you next time.